everyone. I'm David Darst, here to give you a recap of the month of May 2024. It was quite an interesting month of up and down, sort of like Charles Dickens' Tale of Two Cities, the best of times, the worst of times. It wasn't the worst, but it basically went from being much more positive and rosy to backing off a little bit. The two-year U.S. Treasury yield got close to the 4.92%, which was up 5 basis points for the month, and it's up 69 basis points for the year to date. The 10-year Treasury, which, as you know, is a reflection of the economy and inflation outlook, whereas the 2-year is more a reflection of the Federal Reserve monetary policy. The 10-year closed around 4.55, which was down 8 basis points for the month. It had touched as low as 4.38, so it began to come back up as the month progressed through the second half of May, and it's up 67 basis points from the 3.88% yield for the 10-year at the end of last year. The S&P 500 up 4% for the month, whereas it had been up well over 5%, 5.7% during the month. And it backed off a little bit again on this reduction of expectations of interest rate cuts. The S&P 500 up 9.8% year to date, and the Nasdaq up 11.5% year to date. And it had a very strong month, 6.9% for Nasdaq, and you'll hear why in a moment. The why relates to NVIDIA and the whole artificial intelligence excitement. Gold was up 2.3% for the month. It's up 13.6% year to date on buying by emerging markets, central banks, Turkey, Russia, China, Brazil, India, and also by Chinese retail customers, as you know, have been turning their attention to gold from real estate and the stock market over there. Oil, $77.91 for West Texas Intermediate. On June 1st, Saturday, June 1st, is the OPEC Plus meeting, and we'll wait for the final announcement of their policies regarding will they leave in place the 2.2 million barrels per day cut that they implemented earlier this year on top of the 4 million barrel a day cut that they had put into place in last year. Oil is up 8.7% year to date, and it was down 4.9%, as just mentioned, for the month. You had the Federal Open Market Committee minutes from the April 30th, May 1st meeting. That's the most recent meeting. And they showed a willingness, believe it or not, to tighten monetary policy if need be, and if inflation should continue sticky or to rise. Now, we're very fortunate in on the last day of the month, on Friday, May 31st, at 8:30 in the morning Eastern Time, New York time, you got the personal consumption expenditures core. That's stripping out food and energy, as you know. The core inflation number came in at 2.8%, which was right in line with the previous month. So that met market expectations. No big surprise there, and I think the markets were happy with that. You had also the composite purchasing managers indices. Now, as June begins to get rolling, you will get the ISM manufacturing, you'll get the ISM services. But the composite purchasing managers index came in at 54.4 for May, and that was basically up from 51.3 in April, and it was surprisingly strong. And I think that's one reason that you saw interest rates rise back from 4.82 up to 4.92 for the 10-year over the next succeeding days after that composite PMI number came out. And of course, the 10-year moved from 4.38 up to 4.55 towards the close of the month. I would be remiss if I did not mention the blockbuster report of NVIDIA. NVIDIA is going to split their stock 10 for 1. The quarterly dividend is going to go from 4 cents per share per quarter to 10 cents per share per quarter. But that's not the real thing. Revenues were up 262%, so they've essentially tripled year over year. The latest quarter, this is the first fiscal quarter for them. Earnings up 461%. They have quintupled. They've gone up 5 times for the NVIDIA earnings. And the stock was up 9% on the day, and then the next trading day it was up another 7%. So you've had a humongous. They're now the 3rd largest in the world after Microsoft and Apple, as you know. Well over $2 trillion market capitalization for NVIDIA. We would hasten to point out that there are 65 technology stocks in the S&P 500, 65 of them. And after the NVIDIA announcement, only 10 of them went up in association or in concert with NVIDIA. So we would be very cautious about the enthusiasm that we're seeing earlier this year. You're seeing more and more selectivity, and you even see that with the so-called Magnificent Seven, as you know. The 30-year mortgage rate, which is an important determinant of housing activity, it closed up 10 basis points to about 757. Now, the fact set, this is a earnings aggregator from all the securities analysts. FactSet is looking for about an 11% earnings gain this year, which is back-end loaded towards the end of the year because you're going to be having very favorable earnings comparison against 2023's fourth quarter. But you're going to look at about 11% growth for the year as a whole. And the preliminary estimate, and I would emphasize this is preliminary, 14%. The second estimate of the first quarter has just come in. The advanced estimate was 1.6% growth. New revised estimate here at the end of May was 1.3%. So you're seeing a slowdown. Why? A lower rate of consumption growth. People at the bottom half of the economy are basically having reaction to these inflation numbers, and the spending is beginning to fall off. And you even see the top half are basically to look for bargains. So the bottom half are reducing their spending, top half looking for bargains. The economy, despite that Purchasing Managers Index composite was being so strong, the economy at the consumption level, that's why this number came in at 1.3%. Now, the second quarter, the Atlanta Fed's number is right now estimate. This is, I would emphasize here in early June here now, the estimate is 3.5% for the second quarter. Now, volatility is about 14.47, something like that. It even dipped below 14 to 13 something on the last day of the month, on May 31st. And our emphasis here would be to dampen volatility, portfolio volatility. You want to use alternative investments, private equity, private credit, private real estate as a portfolio volatility dampening exercise. Liquidity is another way to do some of that, and we're not ashamed to have some liquidity. The volatility, which is low now, what could cause it to spike would be, when does the Fed decide to cut rates, or God forbid, from the market standpoint, if they start to think about more seriously raising interest rates. So that's one possible influence on volatility. The second is economic growth, and that's the number one factor as we look forward here through the month of June. The economic growth, if it starts to deteriorate further, that could raise volatility and put downward pressure on stock prices. The final source of volatility is the presidential debates in the United States. And the first one will take place on Thursday, June the 27th. And the second one will take place on Tuesday, September the 10th. Now, those will generate a lot of headlines. I don't think they will create volatility, but they will generate a lot of news and media headlines. The next Fed meeting, where we think would be an interest rate cut, would be September 17th, September 18th Fed meeting. Right now, it's about a 50% chance of an interest rate cut then. And then you go into November, right after the election, and then, of course, December. With that, we wish everyone a great month ahead and look forward to catching up with you very soon.